closed the year, that is 2020, both Sensex and Nifty rallied by about 15% each. Big expectation from the budget is the abolition of STTT. Hello and welcome to Money Control. Well, my name is Jananda, and today we're going to talk about the election manifesto from an equity investor point of view. Well, it has been a fabulous year for Indian equity investors. If you look at the year 2020, well, nobody would have thought that back in the month of March 2020, when both Sensex and Nifty hit a 3-year low, that we would in fact close the year with fresh record highs and with gains of more than 10%. Well, in fact, we closed the year, that is 2020, both Sensex and Nifty rallied by about 15% each, and the bigger outperformance came from the broader markets, that is the small and the mid caps. Now, we also saw another trend developing in the year 2020, and that is the retail investors joining the party at D Street, and around about 10 million demat accounts got opened in the year gone by, and this was not because of the budget that we saw in the year 2020, but because of the outbreak of COVID, which actually gave retail investors that kind of time and that kind of space to really work on their stocks, to study about their portfolio and develop a new portfolio and trade accordingly. And that's what led to more investors coming or flocking to D Street in the last 1 year. Now, the year 2021 is going to be a crucial year for Indian investors as well. We are already trading in uncharted territories, and the year 2021 will see newer highs for sure. Now, but if we look at from a budget point of view, there are a lot of expectations from the budget. So for that, we spoke to a lot of analysts, and they've given us 3 broad expectations from perspective of the retail investors. Well, one is the abolition of long-term capital gains tax. Now, remember, it got reintroduced in the year gone by, and anything above 1 lakh will be taxed at 10%. That means long-term capital gains. If you hold an investment for more than a year, then any investment or any gain of more than 1 lakh will get taxed by 10%. And if you hold the security for less than 1 year, then the short-term capital gains tax will be levied, and that is at the rate of 15%. Now, remember, the expectation is that either a government should do away with LTCG, or at least increase the tenure of LTCG from 1 year to 2 years. Now, that is something which is really on the top of minds. Apart from that, the other big expectation from the budget is the abolition of STTT. That means security transaction tax. Now, what has happened? What has happened is that what experts say is that LTCG and STT at the same time leads to double taxation. So that is something which government can do with either one of them. So that is another expectation. Apart from that, indexation benefit to equity related mutual funds. That is the third expectation that experts feel that retail investors is looking for. Now, remember, indexation help investors pay taxes on the real value of investments as opposed to the nominal value. Now, currently the benefit of indexation is available for gold, the fixed income, as well as the real estate properties. So it is not available to equity mutual funds per se. So retail investors do expect that indexation benefit should also be carried or given to equity mutual funds as well. So that is the third expectation coming in from analyst for retail investors. Well, thank you for tuning into Money Control, but do stay log on to moneycontrol.com for more on news, business and economy.